Hello traders, the title of the video is Fractals Trading Mastering the Parallel Market Prediction that relies on the fractal pattern. Let's get started. So we have started a series of videos about the predictive fractal pattern of Mr. Benoit Mandelbrot that has nothing to do with the candlestick fractals. All right. And recently, I have posted a video that I titled Fractals Revealing the Horizontal Financial Market Forecast that uses predictive fractals. So we know now what is horizontal financial market, a forecast that uses the predictive fractal pattern. So we are using the same time frame, looking for predictive fractal pattern to forecast the financial market. That's why I like to call the horizontal, financial market forecast. All right. Today we want to talk about a different topic. It's what we call the parallel market prediction that rely on the fractal pattern. So we have the horizontal and we are talking about parallel. All right. So parallel means going in the same direction, yes or no? All right, and they will never cross, but they are going in the same direction. You see these two lines, the red line and the black line are parallel. So this is a parallel lines. All right, talking about parallel market forecast, we want to use financial instruments that are positively correlated. What do I mean by that? So those who are not trading currency pair may say, "Yo, where did you get that from?" All right, I trade commodity, I trade stock, I trade indices. I have never heard about positive correlation. All right, so traders that are using trading currencies already know that. Two currency pair are positively correlated if they are going in the same direction. All right, two currency pair are negatively correlated if one is going up and the other one is going down. So they are diverging. So they are negatively correlated. So they are doing the same thing but upside down. All right, do you understand? They are doing the same thing but upside down. So when we are talking about negatively correlated, you have to understand that it's more to do with doing the same thing but in the opposite direction. But generally, when we say negatively correlated, people think that one is going up, one is going up, one is going down, But normally we should go a little bit further and think of it that normally we should expect them doing the same thing but in the other way around, So he's doing the same thing but going up, but doing the same thing going down, all right? Normally, when we are talking about currency pair that are negatively correlated, we see almost the same pattern, one doing it up, another one doing it, upside down, all right? So when we are talking about parallel market forecast, we want to concentrate on financial instruments that are positively correlated, all right? And this is working beautifully in the currency market, all right? And we can use that information, all right, those predictive fractal pattern in the currency market, also in the stock market, in the commodity market, in the futures market, all right? Talking about indices, I will explain it to you more, all right? We can use that to forecast what another financial instrument will do. So allow me to draw on my chart. So we have two financial instruments. In this case, we are using two financial instruments, not one. So we are talking about parallel. We have to use at least two financial instruments. So the first one I'm putting there in red, and the second one is green. But both are going in the same direction. So what we do, we go first, we look at one of them and we see what that red one is doing first. Sometimes you will see that one of them may be a little bit ahead and the second one will be a little bit behind, talking about latency. All right. So because generally, I'm choosing my word carefully here, or in theory, all right, they should be doing almost the same thing. If one is a little bit faster than the second one, we have an edge. We can focus what the second one will do because it's like a child that is mimicking, okay, his or her mother or her parents. You understand? So they are following, one is following in the footstep of the other. So when we are talking about parallel, all right, market focus, there is another element that we need to bring into this. We need to bring into this the leadership. So who is leading the race? Who is leading the walk? Who is leading the pattern? All right? Who is ahead? All right? You want to find out which one is ahead. So if the red one is a little bit ahead, or is a leader, he will be leading this one. But it works both ways. Sometimes, okay, the leader will be following, all right, the followers. So it works both ways. When we are talking about parallel, okay, market focus using predictive fractal pattern. Generally, we will pay attention to the leader that everybody else is following. So we look first at the leader, right? The leading currency pair, the leading financial instrument, okay, the leader of the group, the leader of the index, all right? And we will see what that leader is doing, all right? And sometimes the followers, okay, that are positively correlated to the leader or to the leadership will be following the leader. Sometimes the leader will be a little bit ahead of, okay, the followers. And we can use that, okay, predictive fractal pattern of the leading financial instrument to focus, okay, what is likely to take place if you are trading one of the followers. But on the other hand, sometimes you will see one little follower, you see here, little follower behind here, okay, will be a little bit ahead of everybody. So the leader sometimes will be following one of the cookies, little cookies, so to speak. All right, so don't discount, okay, the relationship is not all about the leadership. Sometimes you will see that, okay, sometimes you have one small currency pair somewhere else that is positively correlated to the leadership, or one financial instrument that belongs to the Dow 30 that is not a leader of that Dow 30 or the Nikkei 200 or the CAC 40, all right, or any other group or any other sector. It will be ahead of everybody. And you will notice that if you look carefully, you may notice that now the leaders are following, okay, the little one behind. It's like your child going ahead of you. Normally, you prefer to hold your children's hand when you are walking, isn't it? But sometimes they will go ahead of you, so you are following your children going home, or your children are behind you, they are following you. So think of it of a relationship. One is ahead, either the leader or the little one is ahead. This is about, okay, the parallel market prediction. In this case, what is very, very important, we need to have a positive correlation between two currency pair. I would like to pause the video for 1 second, and I will be back in a minute, and we'll continue with this essential tutorial that will help traders to master the parallel market prediction that rely on the fractal pattern. We are talking about the predictive fractal pattern of Mr. Benoit Mandebro. Let's pause the video, and I will be back in a second. I thank you, traders. Let's continue our discussion, our tutorial. So, two things can go up together at the same pace, which means no one is ahead, so they are all going up at the same pace, at the same speed. All right. So in that case, if they are going up or down at the same pace, we can't use that scenario to forecast the other one. So the best scenario for us is that one is a little bit behind, a latency. All right. One should be a little bit behind. So if one is a little bit behind, and we know that it's more likely to do exactly what the first one that is ahead is doing, we have an idea. We can use the predictive fractal pattern in that case to forecast the financial instrument. All right. So the speed and how they are going is very important. All right. So two things can go up or down at the same pace or at a different pace. Talking about the speed, it becomes very interesting to us that one is a little bit behind, and that will be very useful for us, and we can make excellent decisions with that information. But if they are going at the same pace, we can also use that for confirmation. All right. So the correlation is established, is perfect, but sometimes for different reasons, two things that are supposed to go up or down together may diverge. So when we are saying that two financial instruments are positively correlated, in theory this is true, but practically speaking, they do not always do the same thing. So when you are using what we call the parallel market prediction that rely on the fractal pattern, don't think that because one is a little bit ahead, all right, therefore, the second one will definitely do what the first one has done. Sometimes you may see that the one behind may not duplicate what the one that is ahead has already done. So this is one thing I try to stress on all the time when I'm talking about forecast prediction. Or it's not an exact science. It's an expectation. It's a preparation. We are expecting something. We are ready for something, and if that thing is happening, we take advantage of it. Very simple. All right. So don't get too wild. Somebody may watch this video. I remember a few years ago, people were talking about neural, algorithm, all this blah blah blah. This is to do with the fractal pattern. All right. So you need to get into, if you get into a new subject like this, some of them may say, well, George, I don't know what you are talking about here. You may say, George, you have been talking for 10 minutes, you haven't given me any example yet. And I have one example here. So this is the euro dollar. So I'm using currency pair because we talk more about correlation, but we can apply this strategy. Okay, for the Dow 30, we have 30 stocks that, can 30 stocks. In theory, sometimes they can be doing exactly the same thing, or they may be following the leaders of the Dow 30. All right, so this is very important. We can apply that for Dow 30 components. What we are discussing here, we can apply it to the NASDAQ 100 component, for the FTSE 100 component, to the Nikkei 225 components, all right, to the DAX 30 component. Okay, any sector you can have a list of the stock that belong to that sector, find a leader of that group, and then compare the components of that sector and see what's called the technology sector, NASDAQ 100, and so on. And then you can have it like a crude oil currency financial instrument relating to crude oil, financial instrument relating to gold, and then you want to see have a kind of a leadership and see whether they are positively correlated over the year. Have they been doing a similar thing, not exact, but similar thing? And with that, you can use the predictive fractal pattern, to forecast market parallelly. Okay, very important. Okay, so have one example here. You can see that I'm going to put a vertical movement red line there. So this is the euro dollar on the daily chart. It's somewhere in December 2017, around the 18th of December 2017. All right, you can see that the euro dollar went up. session. Okay, it went up to February. That's what I said to trader. If the year has started, wait for the market to show you, okay, the direction first. Then from February, it starts slowing down. Okay, a kind of a consolidation taking place. So the first phase of the euro dollar on the daily chart, all right, from mid-December 2017 was going up to February 2018, and from February 2018, the euro dollar will start going horizontal. All right. Now there is another currency pair that is positively correlated to the euro dollar. Is the British pound US dollar. Let's see what the British pound US dollar was doing from between that time. So I'm going to put again a vertical line there for the British pound US dollar. So I'll color it also into red. I have a few lines on my chart which I do not want to. I'm a bit reluctant to remove. So I'm going to trade. You see the vertical red line. That's somewhere mid. This is 18th of December 2017. What the British pound US dollar was doing, it was going up to year one. Okay, just up to the which date? We can see that up to the 25th of January, so almost to the end of February. So if I put another vertical line, okay, the euro push it a bit higher, but you can see that February is here. So here it is, okay. All right. So beginning of February, you see, that's what we can say from mid-December up to February, the British pound was also going up like the euro dollar. So now you can see that after that, the British pound US dollar was also slowing down, but the similarity is not perfect. Okay, it's also slowing down after that. You can see it's not perfect. You see, it's not perfect. So in fact, we can say that there is a bit of a change here. This is because of the Brexit. If you are following the news relating to the exit of the United Kingdom out of the Eurozone, all right, so we have a kind of triangle for the British pound, but we have a bit of similarity between, okay, the euro dollar and the British pound. Both went up from mid-December 2017 up to beginning of February, and both are slowing down. That's the main thing, with a little bit of difference from February up to now. Now, you can see that for the British pound, we have a triangle here. You can see that. Okay. So one thing you need to pay attention to is that when we have two things, now let me put again on your chart, you have two things or two currency pairs that's supposed to go up doing almost the same thing or go down doing almost the same thing, the bell, so to speak, will start ringing. Okay, we will become very alert when we notice that there is a bit of dissimilarity, a bit of difference between the two. Then we will say that probably one is doing something that the other one is not doing. So we will need to record that information. Will that information be useful for her to forecast what the other one is likely to do next? Those are the things you need to pay attention to when you are applying the parallel market prediction. So we talk about going up or down at the same pace, doing almost the same thing. But when we see that one is a little bit faster, which means it's doing something a little bit different, which means doing the same thing, but it's a little bit ahead, it becomes very, very interesting to us. All right? Or one is doing something completely different to the other one. So we need to record that information and see whether we can use it to forecast what the next one will do. One of the currency pair that very often is behind is the Australian dollar, Japanese yen. You may see sometimes it will exhibit a bearish trading setup. The Australian Japanese yen will exhibit a bearish setup when the euro dollar is going up. And then the next thing you see, out of nowhere, here it is, start going up following the euro. You wonder how he's performing that kind of a contortion, so to speak, all right? But you need to pay attention to what is going on. All right, but for traders that are trading currency pair, talking about positively correlated, there is a playlist already on YouTube, or you go to www.stochastic-market.com, click on currency correlation. There is a web page. You have to scroll it down. You'll see currency correlation. I talk about it. It's already on YouTube, or you can check the playlist by 2-4, okay, digit 2, digit 4, Forex Trader YouTube channel, and you may see currency correlation. I talk about it, and I'm not going to talk about it again, so you can use that. Okay, reality. So let's go back again. I'm on the daily chart of the British pound dollar. Let's go back again to the euro dollar on the daily chart center. We can see that the euro dollar, we didn't see any triangle. You see, it's horizontal. All right, you see there is a bit of change. So what is happening here? If I go back again to the British pound, both went up at the same time, both are slowing down, but with a little bit of difference. You can see that the British pound breaks above the triangle, and now is he going to form a valid support level? Is he going to find a valid support level above the level of 14011? That is the question in this zone here. Alright, so it breaks above the triangle, retest it nicely here. Alright, if you pay attention carefully here. Alright, so we can draw. Okay, so if you draw it like this, it's going a little bit behind that trend line that I put here, so that it's going below it, but will he manage to recover above the 14011 and continue to go up? All right. All right. Okay, so this is one example of two financial instruments that are positively correlated. Now, the question is, did one is a little bit, was one ahead of the other? All right? So when you notice, you will see sometimes here it's not very clear, especially when we have economy news, all right, future different, you may notice that sometimes one of the financial instruments will be ahead of the others. Or a market leader may be ahead of the component, like the NASDAQ 100 index, Google stock may be ahead, or Apple stock may be ahead, or just another, insignificant financial instrument that belong to the same group will be leading the whole group. Like a child is ahead of, his parents. All right? So pay attention to that. So if I go, for instance, to the Dow 13, all right, sometimes you will notice that on one particular time frame, so you have to keep your eyes open. You can go first in a yearly chart. It's easy to quickly spot a pattern on the quarter. The higher time frame, the higher is the time frame, the quicker you can spot a pattern quickly and see what is taking place. So from there, if you're analyzing a group, start with the leaders first. What are the leaders doing? So go to www.dayportrader.com, click on Market Watch. I talk a bit of market leaders there. So you want to know what are the leaders doing first. What are the market indicators are doing? Talking about gold, silver, crude oil, dollar, yen. Those are market indicators are doing. And then from there, you have a pattern. And on the yearly chart, it's very quick to spot a pattern. But we can go from the yearly chart, looking for pattern, go to the quarterly chart. So you go to quarterly chart, you want to compare the pattern that is in play. So one quick example is to look, is there a bullish pattern? Is there a bearish pattern? What's going on? Okay, and so on. And so here, you see that, Merck & Co. here was bullish, and now it formed a kind of double bottom chart pattern. Is it going to break above the neckline? So you go around, you may see some stock doing almost the same thing that Merck, because they belong to the same group. All right. So here it is. This one went up. This is triple M. All right. So here it went up. So is it going to form a correction like the Merck? is Merck stock, Merck & Co. ahead of Triple M? All right, those are the questions that you want to ask, and with that information, so there was a training file. This one is almost completing its correction. You can note it down because it belongs to the group, and then you check other components that are not yet starting their correction. So you are observing. You see here, this one also a trend, no correction yet. So we can say Merck is a little bit ahead. So if the trending phase completed for Merck, a correction is in place. So you want to compare and see who is ahead, what that one has done. Here it is. You see, it went out, it fell again round. It's a round correction here. A round correction. He managed to break the neckline. So is this Coca-Cola ahead of Merck? So here it is. Those are the things that we are doing when we are using what we call parallel financial market focus. All right? So go around, look at the major indices. Okay, FTSE 100, a component. Check the leader for the FTSE is the financial that are the leaders. All right, CAC 40, check again the group. That's 30. All right, currency pair. All right, okay, are they positively correlated? Is something uniting them? So financial instruments that belong to the same index, to the same group, to the same sector, have something in common. They are technology stock, all right? They are retailers, all right? And so on, different sectors, all right? We can play that, all right? What is the dominant pattern? So when we are talking about predictive fractal pattern, we are talking about a dominant pattern that is likely, okay, to impose itself to the group, all right? So those are the things that we are discussing here. So one cannot learn in one day quickly to master the subject of predictive fractal pattern, but as I'm doing it now, one step at a time, those who are interested in this subject, all right, will see that it will make sense slowly but gradually. Just take it one step at a time, break it down, digest it, all right, so to speak. So the accumulation of the knowledge. So when we are recording video that are relating to the accumulation of the knowledge, they say, George, it's all theory. I'm not learning anything. Remember when you were in a classroom, the theory is very, very, very important. So if you do not have the vocabulary, the grammar, okay, the knowledge, how you call things, all right, and so on, is part of the learning process. So the knowledge, though some people may say, George, it's not useful to me, it's not practical, yeah, but you need the theory. Accumulation of the knowledge, assimilation of the knowledge, or the digestion of the knowledge, the practice to gain more experience and a skill before you are fully formed, okay, as an expert predictive fractal pattern trader. Alright, so I will stop now because we don't want the video to be too long, do we? Alright, 26 minutes, that's a long time in the life of traders. So if you have any question or suggestion, put in the comment section. And in due course, I will be recording another video to answer your specific question. Before we wrap it up, I want to go back quickly to the euro dollar and the British pound because this strategy of parallel financial market forecast is very, very useful for those who are trading forex because we have a lot of correlation going on. If you look at the euro dollar on the quarterly chart, this is, by the way, this is a British pound, British pound. Okay, I will go instead to the monthly chart. I want to talk about this very fast before I forgot about it. On the monthly chart, you can see that somewhere in 2014, we have this resistance here. Okay, the price did found a resistance on the edge of this red trend line and then it came down. Now it started going up. Pay attention to that point. In 2014, price went down and it started going up. If you look at this is the British pound dollar, look at the euro dollar. Going to go to the same time frame monthly chart, you will see that the euro dollar did almost the same thing again somewhere in mid 2014, somewhere there. It dropped down, but you see a bit of difference. Then it went horizontal before. It's now going up, and both currency pair are now approaching that red trend line. But now you can see that the euro dollar is quite close to that red trend line. Let's compare the speed. You see, the British pound is not yet close up to that. All right. A trend line on the monthly chart. So one trick that we can do, talking about the speed and the pace, I can expect to a certain degree that the British pound, US dollar, will also try to come a little bit closer to that, trend line. All right, because the euro dollar at this stage is a little bit ahead, is quite close to that trend line on the monthly chart, while the British pound, US dollar, is a little bit behind. So this one example that I can use, which means it's a trading setup. I will not say that, I will just now go and buy the British pound, US dollar because George says so. No, it's a trading setup. It's an observation. And then we forecast. The forecast is what? It's an expectation. Now, if that is taking place, we have an edge. We use a different time frame trading method to trade it, all right, gently. If the market decides not to bring it there, well, it's going to go down, the signal will fail, and then you just come out. So at this junction, we may say priority bullish signal 14011 for those who are trading the British pound US dollar. High probability that the price will also, like the euro dollar, the leading currency pair, the euro dollar is the leading currency pair, is quite close to that trend line. Positive correlation. We will see. Will it happen? Will it not happen? Okay, it can happen. It may not happen, all right? So use a different time frame trading method to trade it. So this will conclude our discussion today. If this video has been truly useful to you, okay, let us know by sticking your beautiful thumbs up. You think that this is another blah 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 and you do not want to know more, George, all right, mark it down. That will put us under pressure to improve our next recording. All right? However, if this video has been truly useful to you, feel free to share with your friends on Google+, on Twitter, and also on Facebook. All right. Thank you for watching, and until the next time, enjoy yourself and be very happy. We are the GSCW24 traders talking about fractal trading, mastering the parallel market prediction that relies on the fractal pattern. If you have not yet subscribed to our channel, this is the moment. Feel free to subscribe to our channel today and be sure to hit the icon button, the notification icon, which is the bell back icon, okay, on YouTube. So anytime we record a video, you will be notified right away. So you may, in your own time, decide when you should watch it or not to watch it. Happy trading to you all, and I will speak to you soon. I will be pausing, as I said before. One trader said to me, George, I'm not tired yet, okay, but what we will do, because I have already recorded 5 videos. Is that 5 so far? 1, 2, 3, 4, yes. This is the 5th video talking about predictive fractal pattern. All right, other traders may not be interested in this topic, therefore I will pause this series of videos for now, all right, and I will go back talking about other things, okay, that are important to other traders, all right, and then maybe 1 month later or 2 weeks later, I will come back again and continue with this series of video. So think of it like a YouTube creator. We are like the chef in the kitchen cooking for our client. We don't want to feed them the same food every day. When we do that, all right, they will start getting a little bit fed up of us. And we don't want to do that, all right. So we cook, okay, a duck today. Tomorrow we cook a chicken and so on. We provide different, we talk about different topics that are important to traders, and we monitor what people like more, what people dislike, and so on. And from there, we try to build a channel that is dynamic, so we do not ignore other traders. So if you are very excited, like I do myself, about this topic, hold it for a while. Know that this is just a poll. We'll come back to it. But meanwhile, I will be going around talking about different subjects that are also important when we are talking about level 3 technical analysis. Happy trading to you all, and speak to you soon.